come and take a...
Enough chairs?
Okay, welcome. Welcome, everybody. It's cooling down here a little bit, thank goodness. It was getting a bit hot, but the air conditioning has kicked in finally, and temperature's coming down. Not metaphorically, though, because I think we're getting ready for probably one of the most anticipated panels of the day, which is our behind the screens, how the top traders are making it in prop trading. So we've got a fantastic panel lined up for you here. I'm going to hand over the introductions to Brian Griffin from Cubera Markets, though, who's a great advocate of prop trading. So, Brian, welcome to the stage. I'll hand over the control to you.
Thank you. Thank you, Simon. Okay, everybody, how are we all doing? Quick show of hands. How many people here have a prop account? How many people have had a CFD account? Quick show of hands. Who would prefer prop over CFDs? Why? Let's find out. Please, we'll start with Bash at the very end, and please just introduce yourself, talk about who you're with and how you ended up here.
Thanks. My name is Bashar Gokul. I'm the Director of Operations at Handtech Trader. I've been working at Handtech for about 9 years now in a variety of roles, first on the brokerage side and then 2 years ago on the prop side. I've been part of the team that set up and launched Handtech Trader about 2 years ago. I would probably be described as a bad trader on my best day. However, I really hope to give you guys some good insights on the data that we see from our traders, both from a data perspective and in the conversations we've had with them.
Okay, fantastic. And next we have?
Hey everyone, I'm Brett Simberkoff, CEO of Tradeify. We have about 50,000 traders who have been in our program. We have about 40,000 with us currently, and I'm very excited to go over what works for a lot of their strategies to get funded, but not only that, to stay funded, because I think that's the number one thing that traders struggle with. It's one thing when you pass the challenge and are able to take the step to a funded account, but keeping it is very important. We launched last year in August, but the company actually started in 2021. Put on the back burner a bit, evaluated the market for a while, and we've been able to explode onto the scene over the past year with a lot of honest, transparent rules and just clear-cut honesty in the space. So looking forward to talking to you all and giving some strategies that our traders are finding success with.
Fantastic. Riz, please.
Hi, I'm Riz Iqbal, host of the Words of Wisdom podcast and Chart Fanatics. Coming up to 10 years in trading, personally, but I have the incredible honor of speaking to some of the greatest traders of our time, of the past time, and then hopefully soon to be the future time as well. But yeah, excited to go through this panel.
Am I on now? Yeah. My name's Jason Sen. I started trading, well, I started on the floor of the London Stock Exchange in 1987 as a trainee option broker, and then I moved over to market making on the London International Financial Futures Exchange in the 90s, and then I transitioned into screen trading at the turn of the millennium. Seem to have managed to survive the industry for 38 years, and I currently provide mentoring and trade signals.
And Michael.
Hey, I'm Michael Katz. I'm the CEO of Tradepool. We fund stock traders. We're currently the biggest and largest company that fund actually equity traders. We are a sister company of the Fivers that you're probably all aware of if you trade in Forex for the last few years. And we currently, as stock traders, we currently have a few good thousands of traders. In most cases, I will interview a lot of our funded traders. So I'm happy to share the knowledge that I gathered from our funded traders and also my own experience as a 17 years trader.
Thank you, Michael. I guess we'll start off speaking to the individual traders, Jason and Riz. Talk to us about how you trade, but how did you end up here? Where did you start? What worked? What didn't work? What's currently working? Jason, we'll start with you.
Well, actually, I was just thinking earlier, because this is my third time on the stage today, and I wish I had something like this, like 25 years ago, when I transitioned from floor trading to screen trading, because we didn't have a clue. We were put in front of these screens, moved off the floor, and it was all trial and error. And wow, I made every mistake under the sun. Month in, month out, year in, year out, if I'm honest. And it would have been amazing if I could have sat here and sat and listened to a panel talking. It probably would have saved me tens of thousands of pounds and probably years of frustration. But so my approach is technical analysis. I identify low-risk trade opportunities through technical analysis. I'm a trend trader primarily, so I'm looking for a bull trend or a bear trend. I'm a buy support in a bull trend. I sell a resistance in a bear trend. I mean, that's pretty much it in a nutshell. And then I developed my trade management strategy and my account management strategy, which again is pretty simple. I didn't even know about trade psychology, if I'm honest, until I started screen trading, because on the trading floor we were sort of reacting to prices as market makers. So that was a whole new thing I had to learn after already been in the market for 15 years and realizing why I was self-sabotaging and screwing up my account and blowing trades and doing all the FOMO thing and over-leveraging and over-trading and then having fear and not trading at all. So yeah, I'm sure same kind of journey that you're all going through right now.
What about you, Riz?
So with myself, I started out in Forex, or to be fair, still in Forex. But to be honest with you, I took 2 years when the podcast was really taking off. I didn't trade. I put it to one side to really focus on growing the podcast. I actually started trading again this year. Managed to do $100,000 in payouts, which surprised me, to be fair, because it's been there quite some time. But I primarily focused purely on Euro USD. I was scalping before, and that's another reason why I stopped when I started the podcast, because it requires, I used to scalp London session, and with the sort of routine and everything that goes on with the podcast, I just didn't have that. So I knew that if I tried to, I'd probably fail at both, trying to spread my attention. So I paused that. But then this year, I tried and started really doing swing trading. Same on Euro USD, which probably isn't the best idea, especially with how range bound it is. But yeah, we managed to do $100,000 in payouts, which is great. In terms of strategy, I just use structure and liquidity, and that's pretty much it. I try to keep it very, very simple. And I do try and go for high risk to reward, but the caveat of that is, for me anyway, is I will take a few losses before we get that win. The transition from scalping to swing trading was very interesting, going from obviously fast paced, being in and out, versus having to hold for, my latest trade was 42 days I held that for, which is probably the longest I've held for a long time. And yeah, the reality of that is so different, of like holding P&L, seeing P&L swings, like 10K up to 2K, to 15, back to 3K, like, and just being okay with that. Obviously, trading for me, however, and this is very important to note, is that it's a part-time thing for me. It's not something that is my full-time income. That comes from the podcast and that side of things. So it's not, when it came to holding for 42 days, it was slightly easier because I'm not relying on that capital. I could let it play out, which is, to be fair, for any trader. And that was big for me, actually, in terms of some of that low moments of what helped me to become profitable, was the fact that rather than trading for the need of money, like having to make money from the markets, I had to take a step back, because when I was doing that, I was gambling, essentially. I was just throwing money at trading without actually having an edge or data. And when I actually took a step back, about 6 months, where I focused purely on building that edge, gathering that data, and most of all, saving money, so that when I was trading, it wasn't, in my mindset, it wasn't that I needed to make money. I had to make profits to pay my bills or anything. I had a cash cushion, and that was a huge shift for me when it came to profitability, is taking that time to actually develop an edge and taking the time to actually focus on finances outside of trading, so that when it came to trading, I didn't have to rely on my profitability or not to pay my bills or to be able to live.
Very great points. These are for the 3 prop providers, and we'll start here with Michael, and this is kind of a bit of a twist on that. Props have rules. What scalping? Do we like scalping? No one likes scalping particularly, but we won't focus just on scalping. Tell me, as a new prop customer, what is the best approach to get through the rules?
Okay, first of all, you need to learn them.
Say again?
You need to learn them to read the terms and condition, FAQs, of course.
Right.
But the thing about the rules, a lot of the times traders will look at the first time that we'll get into a prop, they will look at the rules like limitations, right? Something that is negative. A limitation, it's a negative word. But basically, once you understand the rules and trade according to those rules, you actually see that you become a better trader.
Right.
And 100% of our traders, when I interview them, will say exactly the same. Those rules, the daily pause, right, the max loss, all of those rules kept them and made them a better trader, improved them over time, because when you have those boundaries, you become better. And when you trade in your own broker account, doesn't matter if it's CFDs or equities, you trade in your own money, no one will restrict you, right? No one will stop you. Your broker doesn't really care if you will lose the money or not. And whenever you have those rules and you understand them and tweak your strategy according to those rules, you will become better, 100%.
Great point. The point being, learn the rules, read and understand which prop you're with. To you, Bash, Handtech, rules, strategy, what's the best place to start?
So in terms of trader strategy, it's never really a set best strategy that works well. You know, we've spoken to a lot of traders and gathered a lot of data from taking a look at this. And there's no one particular strategy that works well. Trend trading generally has been very, very popular, and we see a lot of traders making profits during big trends. For example, gold earlier this week, big moves up. We had a lot of traders make money from that. So that's one particular strategy, but the clear thing that we see is that there's never a set way. And I touched upon this earlier during an interview on the bull rush stages. Really, risk management, it plays such a huge factor into how you trade. Michael hit the nail on the head. You know, you need to really understand that the rules are there to help you learn, protect you, protect the firm, and really encourage good trading behaviors going forward.
Right.
So really from our side, generally applying risk management principles to your trading will help you become a better trader overall. And that will really feed into whether it's trend following or trying to play a range or whatever it is.
Okay.
Yeah, I agree with what both of them said for the most part. I mean, we see the same thing here at Tradeify. I will say that I won't say that there's one strategy that a lot of traders do, but I will say that what a common trait that we see is they are trading less than more, because I think one of the main things that traders struggle with is overtrading, and then of course over leveraging. So we are seeing smaller trades and a lesser quantity of trades overall from our successful traders. But when it comes to the rules, they're really in place to be more of guidelines or training wheels, because getting into trading is hard, especially new people. They get into prop because they want to find a way to leverage their capital without as much risk out of pocket, but they don't have that system down. So we like to look at the rules as guidelines. We also have a consistency rule that's basically in place. And a lot of people, you look on social, a lot of people, they talk negatively, as you said, about rules, but really most of the people who are talking negative aren't the ones getting payouts. The ones that are following the rules and following the system. And the consistency and things like your daily loss limit are in place to keep you consistent, not aim for those high targets, right? You might have a crazy blow off the top day on your account, right? But if you give it back the next day, what's the point? I'd rather hit base hits over the course of a year than have a home run and strike out the next 3-4 times, right? So yeah, that's pretty much what we're seeing here as well.
Just before we move on, and this is for the props again, can you just list the one rule that everybody fails at audit? What is that one rule that every new prop doesn't get through? If there's one. I don't know if there is.
I'll jump in on that. I don't think there's one particular rule per se, but generally the appeal of prop trading is that you have a route to being funded, i.e. you don't have to put up all that capital yourself. Something that we see a lot in, and I'm sure it'll be the same on the other side, is traders kind of taking advantage of that and trying to abuse that, i.e. I'm going to buy a $49 5K challenge and I'm going to go full margin gold on it and see if I pass. So that's the kind of trading behavior which I'm sure my colleagues over here would probably agree with.
Overtrading straight in and just blowing straight up.
Well, overtrading is I guess part of the strategy side, which we don't have any view on overtrading as a whole. Generally, as discussed, it's not a trait of a good trader to be overtrading, but specifically just the aspect of abusing the beneficial aspect of trading on a prop account, i.e. I'm just going to keep buying accounts and keep trying to go full margin and try to get to that payout and make all that money back. So that's
Right.
something we see a lot of, and we really try to, I think you'll see a lot of props kind of address that in their rules and in the statements they put out.
Okay, interesting. Michael, same thing?
Yeah, just adding on top of that, this is why the consistency rules, as we also have it, is really key for traders, because they cannot swing for the fences, right?
Right.
It's not a one lucky trade. They need to prove themselves to show consistency, and then we push them to the funded stage and also to the payout.
Right.
Yeah.
So back to you, Jason. If we were to give the audience 3 or 4 things, and we know props of rules, we know that it's probably best not to swing for the fences, but 3 or 4 simple pointers, starting points, what would they be?
Pretty much based on what we've just heard, it's have a strategy. Clearly, gambling and swinging the bat isn't a strategy.
Right.
That isn't going to, you know, if you get really lucky and you pass the first stage of the challenge, terrific, you've been lucky, but then what do you do?
Right.
You know, how are you actually going to continue in the long run, keep the account, and actually get paid out? So, you know, it's clearly not a strategy that works. You have to actually decide, right, have a criteria of this is how I'm going to identify a trade, this is how I'm going to enter a trade, this is how I'm going to manage the trade.
Okay.
And something that is repeatable, that you can collect data on at the end of the week, at the end of the month, say, okay, here's my trades. What's my win rate? You know, what's my risk versus reward? What's working?
Okay.
You know, is my trade hitting TP1? How much percentage of the time? How much of the percentage of the time is hitting TP2? And these days, you can throw all that data into ChatGPT and say, right, analyze it. You know,
Okay.
where am I winning most? Where am I losing most? What do I need to analyze? It's a great tool.
Riz?
I would say a big part of it as well, just to talk about that point when it comes to traders, or I wouldn't even call them traders, but the people gambling on prop accounts.
Right.
A large portion that can be a problem with is that a lot of people that are choosing to look up to, you know, whether it's these influencers, etc. People don't realize that some of these influencers are pretending to be traders, when in reality that's what they're doing. They're doing these, you know, just full porting accounts, and they might be able to tell you, oh, I did 200K in payouts, but they've spent 150, right? But they won't say that. They won't say that bit. And again, fair play to them if they're able to do that and they're able to get away with that, but as long as they're open and honest about that, which they won't be. And that's why I always say be very, very careful about putting people on a pedestal just because you're seeing payouts. Because a lot of people create a lot of pressure on their trading and their success trying to compare themselves to these people that they see online. Oh, this person's done a 10K payout, like, and maybe I just did 2. Let me try and push the boundary, not realizing that this person not only is gambling, essentially, but some even have deals with prop firms where, and probably not of the prop firms are, you know, at this event, but there are people who are doing these things, right? And you have to be very, very careful. That's why it's so important to really spend your time choosing who you learn from, who you decide to look up to or use as inspiration or whatever it may be that role model in your trading. Because especially, you know, there's so many people in the space, and unfortunately there's a lot of bad actors. And at the end of the day, if you go down the wrong path of following the wrong people, it's just going to set you up to have the wrong expectation. And not only the wrong expectation, but an expectation that probably doesn't exist when it comes to being an actual trader. And I think that's a very important aspect to really understand is like, do you actually want to be a trader? Is that actually what you want to do? You want to have a trading career? Or are you looking to just try and gamify a model just because you can? And as long as, if you want to do that, that's fine, but accept the repercussions of what happens with that. It's a short-lived endeavor, really, because, you know, especially with the rules that are in place and the clamping down that's taking place, obviously, as things innovate, it's not something that can happen long term. And I'm sure you've probably seen people in the past who were known for doing large payouts, but they're not allowed to trade with prop firms anymore, simply because that's not trading, right? And unfortunately, a lot of people won't say that, but that is the truth. Like, so really be very cautious and decide carefully who you choose to follow, who you choose to learn from, whose advice you choose to take. I just realized you probably couldn't hear me for a lot of that, so apologies. But yeah.
It's fantastic. Great advice. Just keep everything rooted in reality, right? So back to you, Bash, again. A continuation of that point. If you had an educational component within Handtech, what would be the 3 things that you would like all new people to learn before they ever start their prop trading?
Well, I think reading the rules sounds very simple and
Right.
basic, but really it's really as simple as that.
No
Number
one
one,
reads the instructions. I don't read the instructions. No one does.
well, it's, I mean, you think, okay, you're paying money for a challenge, you know, you're trying to get funded, you're trying to make it there, you know, go through the rules and understand them. Every firm is different. You can't expect one firm to operate in the same way as another. So just really get familiar with the rules, understand how they work, and go from there. That's the first thing. And second thing, I don't really harp on too much about risk management. I think it's super, super important. But really have a strategy, document how you want to trade, really stick to it, and hold yourself accountable to that. I think that's super important if you want to be a successful long-term trader. That is the first thing the second thing I would say after reading the rules, just make sure you have a strategy and really follow it.
Okay.
I don't necessarily have a third, but if I would, I'd put risk management again, because the amount of times you see traders really just not really following a pattern in the way they trade, just over leveraged, over trading, real simple things, and we kind of touched on it here, just trading too many products, twice as many trades from the least profitable traders than the most. It's really about getting all of those things in line and really dictating that strategy and following it.
Right. Thank you, Michael.
Yeah, we'll just add a little bit on actually what Riz mentioned before. So the expectation that you want to see from your trading, right? Because at the end of the day, trading is a business like anything else. You need to understand how much you're going to put in to invest in your trading, right? Maybe it's courses that you buy, and maybe it's a trading journal, live trading room, whatever it is. So that's investing that you're going to put in. You need to understand how much money you want to make on a monthly basis, right? Some of them, they will watch YouTubers, obviously not Riz, which is a great YouTuber. But the other guys will put up the Lamborghini and the Ferraris and all of those nonsense, and people will actually look to make those numbers, right? I need to be a multi-millionaire trader. You don't. I'm guessing most of us in the room will be happy to make $5,000 a month, 5,000 pounds a month, right? Or 10,000. You don't need to be a huge trader. You don't have to be the LeBron James of trading. So the expectation of it, understanding what you want to achieve from it, will be definitely one of the goals I believe you need before jumping into the trading part.
Okay.
Yeah, for me, I think the top three things I'd recommend is still paper trading first, even before you go into a prop firm challenge. Obviously, still you're, at most firms at least, you're starting out in the simulated environment anyway when you go on a challenge, but developing a strategy before you even put any money into trading, whether it's a prop, personal, either or, I think you should try to own in on your strategy, buy paper trading first. A lot of free tools out there for that. Now, of course, that eliminates the emotion of it. You know, you don't have any skin in the game. Even with prop, you're still putting in lesser money, of course, than funding your own personal account. But until you actually put in some of your own money, you're not going to see the true emotions that come with trading. When you are paper trading, it's a little bit easier to be a robot, which we all wish we could be when it comes to trading, I think. But that would be the first thing I'd do. Second, kind of like you said, reading the rules of all of the props, especially because there's a lot of differences when you go from the challenge to the funded, as we know, in different props. And then even going past that and seeing if, you know, they have a live account or what comes after the simulated environment. Is there a path to a longer partnership with this prop firm? And then third, I think you touched on it as well, is journaling your trades.
At yourself. I mean, at a CFD prop firm, we have a max drawdown rule and a daily drawdown rule. Daily drawdown is 5% of your previous day end of day balance. So as long as you're losing 5% in a day and you keep yourself a buffer, I 100% agree with that attitude mentality. Traders need to think about the prop firm they work with as a partner, not just someone, oh, they gave me funding, I made 10K, withdraw 10K, and then expect, oh, I had a bad month, they should, you know, be helpful to me. But really, it's about building that